Hi, everyone. Good morning, good afternoon, good evening, wherever you are around the world. Welcome back to Family and Finance. My name is Rose Joshua. So today we are continuing our conversations on RRSP, which is Registered Retirement Savings Plan. If you live in Canada, this is RRSP season. We're almost in February, and so one more month and one more week, a week and a month, and the RSP season will be done for 2025-2026 season. Okay, so today I'm just going to talk about if you have an existing RSP or something called a LIRA. So a LIRA is LIRA, which is locked in retirement account. So typically, a LIRA is a retirement savings that you would get when you leave a former employer. So let's say you're employed in company A, and they had an RSP or pension plan for you, and you leave the company. So they might have something called a DCPP, which is Defined Contribution Pension Plan, or a DBPP, which is a Defined Benefit Pension Plan, or a PRPP, which is a Pooled Retirement Pension Plan. They come in different shapes and sizes and names, and they all kind of really mean about the same thing. There's a pension plan. There's one called a DPSP, which is a Deferred Profit Sharing Plan. So regardless of what you had at your former company, when you leave, sometimes they would lock it in for you after you leave. If you didn't move it yourself after you leave, they would convert it or change it into a locked in retirement account. So a lot of people have LIRAs, but they don't know where the LIRA is coming from, why it's called a LIRA. So now you have it. Okay, so if you go to the Government of Canada website, canada.ca, look for LIRA, L-I-R-A, locked in retirement account. So today we're having a conversation around that. So if you have a locked in retirement account, or you have an RSP that's just sitting somewhere and it's not really doing anything for you, in the sense that the rate of return that you have is very, very low. So we call those low performing accounts. Low performing accounts. It's not a GIC, it's just an account that you forgot somewhere. And a lot of people have forgotten accounts with their former employers that they didn't check, and it's still there, just gathering dust. So if you have a low performing account that's probably, generating 3%, 2%, it's just sitting there, you are losing money. So today I want to challenge you, connect with me. Let's transfer. So we're going to transfer out. We're going to transfer those low performing accounts into another place where they would actually begin to generate money for you. Remember, these are retirement monies, and every penny counts. They all add up eventually to your retirement, when you retire, to your retirement money. So if you just ignore those liras and you think, oh, it's small, it's 5,000, it's 6,000, it's 2,000, whatever, I don't really care about it, let it just stay there. I think they're investing it somewhere. I want to challenge you to be more responsible for your own money. So connect with me, Rose Joshua, 780-680-1334. Let's transfer out those LIRAs and forgotten RRSPs, low performing RSPs, even if they're not forgotten. If you have your RRSP right now and it's sitting somewhere and is only generating 2%, 3%, 4%, Let's make your money work better for you. Let's transfer them out. I will work with you to manage them and get you better rates of return. So what I want to show you now is a small illustration. So come with me. I'm going to share my screen and just show you the power of 1%. Okay, the power of the percent differential. So it may not be 1, it may be 2, 3, 4, 7%. Every percent matters. Every percent in the long run matters. Why? We have this money sitting in our account, is sitting somewhere for 10, 20, 30 years. So I met somebody a couple years ago. I met her, and she started work in a company at age 22. She worked there for 2, 3 years. She had an RSP that was sitting there for, let's say, $3,000. So for 2, 3 years, she actually left the money sitting there at about $3,000 at age 25. So that money will be sitting there till retirement, which is another 40 years. Now, there's a big difference between if it grows at 2, 3% and if it grows at 10%. So let's just take a look at that, okay? I'm going to share my screen now. So I'm going to share my favorite compound interest calculator, all right, from the Ontario Securities Commission. I got permission from them to use this as my favorite compound interest calculator for educational purposes. Yeah. So let's say you have, I'm going to say $5,000. So you actually feel free to experiment with these things. You need to learn to do the math for yourself. Don't let people make decisions for you concerning your money. So let's say you have this LIRA or RSP just sitting somewhere, $5,000. You add nothing to it, and it's sitting at 3%, for example. And it's locked in there, I'm going to say, for 30 years. So let's say you had a former employer, you quit there at age 30, 35, and you have it sitting there for 30 years. $5,000, nothing added to it for 30 years at 3%. At the end of 30 years, it's sitting at $12,000. $12,284. But what if you change that? Let's say we transfer it out and we make it work harder for you at 10%. And yes, you can get 10% and higher in Canada. So you make it work harder for you, same money, same 5,000, but now it's just, you just changed it from one vehicle to another, transfer it out, and you go from 12,000 to 99,000. 12,000 to 99. So the gap is $87,000. And now we're only talking about $5,000. Now, somebody would ask me, oh, but are you able to transfer them? If you transfer them, won't they tax you? No. You can transfer as long as you're not withdrawing it. If it's a transfer from one institution to another, and we would apply to an institution and say, can you talk to that other institution and can you have them transfer this to you? The institutions talk to each other, and it's a transfer, so you're not withdrawing them. There's no cash coming to your pocket in that transfer transaction. So there's no tax. No tax. For those of us who are afraid of taxes, no tax. Okay? So this is a case of $5,000. So let's say you had $10,000 sitting in an account or in a couple of LIRA somewhere, because some people change jobs. They go to one job, they have LIRA 1. They go to another job, they have LIRA 2. They go to another job, they have LIRA 3. No jokes. No jokes. They have LIRAs all over the place because they tend to hop from one job to another. And that is just something that people do when they're much younger, they're searching for the ideal job. Nothing wrong with that, but you have LIRAs all over the place. So what you need to do, connect with me. Let's transfer them all into one place, okay? And let that place have, and we'll make it work harder for you. So let's say you have $10,000 sitting around. And I'm going to do an example. It's very similar to what we did with the 5,000. I'm going to do an example here. 10,000 at 3. Let's say it's sitting for 35 years. Just 5 more years. 35 years. 10,000 at 3% for 35 years is $28,500. Now, if we just transfer it out to a more hardworking channel vehicle, 10% LIRA, RRSP, working harder, for 35 years, it goes from 28,000 to $326,000. The difference is almost $300K, $298,000. So the percentage matters. Okay? So here's my call to action. If you have an RSP sitting somewhere not doing anything much, not performing, is a low performing fund, and it's not just only RSP but TFSAs, any investment that you have sitting somewhere not doing much, let's transfer them. Transfer, not cash out. So tax-free transfer, okay, of your LIRA, locked-in retirement account, of your RSP, of your TFSA, whatever you have that's not doing well, let's transfer them and let's help you to get more money into your pocket at retirement. Remember, these are long-term investments, and if you keep them in low-performing funds, you are losing money. So let's help you to recover all that, okay? So again, connect with me, 780-680-1334. Let's transfer them out tax-free. All right, God bless you. If this has been helpful, please share with your friends, subscribe, and please like. Thank you. God bless you. I'll see you again. Bye now.